Hey everybody, hope everyone's doing well and had a good day. This is the Emini end of day review for Monday, July 15th, 2024. Because it is Monday, look at the weekly chart first. And I mentioned this last week, but coming into the week, we have this tight channel, but the problem with it is that we have three pushes up. 1, 2, 3. So I figured there's probably more sellers above the high of last week if we get there. There's a big tail on top of the bar, sellers into the close of the week, and it's three pushes up. It's also nested. There's maybe leg 1, leg 2. The second leg has three pushes, so possibly we have exhausted bulls. Now the problem with selling below last week's low is that it's a bad sell signal bar, consecutive bull bars. Not many traders want to sell below this bar. So I think if we do get below the bar, there's probably more buyers below. And then for the daily chart today, coming into the day, I had a couple of thoughts coming into the day. Obviously, the past few days we've had some small trading range days, and then the past 3 days completely overlapping one another. Lots of big up, big down, and as we look at the other time frames, we'll see that that is a common theme: the big up, big down, big confusion. So I thought coming into the day, there would be sellers in the upper third of Friday's bar, the most recent bar we can see here. Big tail on top of the bar. I thought if we did get above the high, there would likely be sellers above. It's a bad buy signal. And if we went below the bar, probably more buyers below. Not a very good sell signal bar, has a bull body, and it's in a tight trading range. And then coming into the day, you can see this big up, big down, big up, big confusion. You know the market is in a trading range. When you look at this chart, it's not clearly in a bull trend or a bear trend. Coming into the day, we had a gap up, and bar 1 was a bull bar closing on its high, so the market accepted the gap up. So you can think of the gap up as a breakout and bar 1 as follow through. So think about bears who are short down here. Or if you're a bull, we had this big gap and then follow through. You just picture a big bull bar here. That's trapping a lot of traders, trapping bears into a losing position, trapping bulls out of a winning position. Breakouts and trapped traders result in second legs. So the gap up, consider it a breakout. This is strong enough for a second leg to the upside. Bar 1 bull bar closing on its high. Most traders rather not sell above the bar. If they are going to look to sell, they'll probably look to sell higher or look for more selling pressure first. And then bar 2, it's a good bull bar. It overlapped bar 1 by a good amount. You can see the tail on bar 2. The market sold off, tested around the open of bar 1, and then rallied, closed on its high. Good for the bulls, consecutive bull bars, one being fairly big. And you combine that with the gap up. This is all one leg, and that's strong enough for there to be buyers below. So there's probably buyers below bar 2, buyers below bar 1, scaling in lower, looking for a second leg to the upside. Again, as far as selling above 2, it's not really ideal. Better to wait for some selling pressure. However, you can argue we had this big breakout on Friday. And by the way, if I ever refer to Friday as yesterday, whenever I say yesterday, I'm just referring to the prior trading day. So up here, yesterday's high means Friday's high. So here, the bar 71 low, that's a breakout point. I mentioned this in the last video. We had a rally, a bull flag, and then a bear breakout of a bull flag. That's a surprise, and this is a leg 1 breakout. This traps a lot of traders. So what bar 2 is testing is a breakout point. And so whenever you have a strong bar like bar 2, and you're inside of a trading range, you have to wonder if it's a vacuum test of some resistance area, like a breakout point. And so that's what bar 2 could be. and that's the danger of buying a bar like bar 2. And then a big outside bar on bar 3. So you can see bulls who bought here, maybe buying below the bull flag, betting on a rally, they got trapped. And then when the market came back, tested the breakout point where they got trapped, bulls were eager to get out of their longs. We had this huge bear bar on 3. Outside down, and going below bar 1, we're expecting buyers below bars 2 and 1, and scaling in lower, because again, this breakout, the gap, strong enough for a second leg. Bar 3 is strong enough for its own second leg to the downside, but it might be minor when you compare it to the size of the gap up. So the bulls, they're willing to buy below bar 3 because it's an outside bar, it overlaps bars 1 and 2, and the overall context is a trading range. So bar 3 is a trading range bar. It's an expanding triangle on a smaller time frame. Bar 3 attempted to break out above bar 2 and failed and reversed. Now attempting to break out below bar 2 and bar 1, but there's probably buyers below. And then 4, a disappointing bar for the bears. Disappointment is the hallmark of trading ranges. Bar 4, it's a doji and a fairly big bar, so not a very good bar to buy above, big risk, and it's a trading range bar, so there's probably more sellers above for a second leg down. And then another trading range bar, another doji. If you think about what happened on these 2 bars, 4 and 5, or even 3, bear breakout, and then we paused. We went a little lower on 4, but eventually this was a pause bar, trading range bar. Then we sold off again on bar 5. And so some traders will view that as the second leg down that we were expecting to get after bar 3. So as far as some traders are concerned, bar 3 strong enough for a second leg, well, bar 5 was that second leg. So bulls will be willing to buy below bar 5, buy the close, buy above, betting on a second leg up, leg 1, leg 2. Yesterday's high might be a magnet. Inside bar on 6, consecutive inside bars, that's breakout mode, II pattern. Probably more buyers below 6, and there might be sellers above. But the problem with selling above 6 is you're selling sort of in the middle of the opening range. The bears might want to wait until we're higher, like above bar 3. They might even wait until we're at yesterday's high. And as far as selling below 6, not really ideal. You're selling below consecutive inside bars. We're getting higher lows, and the bulls are still expecting a second leg to the upside. 7, we have a bull trend bar, closing above the prior 3 bars, but still within this range. So there's some risk buying 7, where you might be buying high in the trading range. There might be sellers not too far above. Plus, you can argue it's 2 legs up. You can even argue it's 3 legs up. We rallied on 4, pulled back, rallied on 5, pause, rallied on 7. Some traders will argue bar 7 resets the leg count because we have an inside bar. That's breakout mode. So this could all be viewed as a trading range rather than leg 1, pullback, leg 2. So maybe this is a trading range, and then we have a breakout on bar 7. So the bulls, they want to see a follow-through bar. At the minimum, they want to see the absence of a bear bar. Bears, rather than selling 7, they'll probably wait to sell a little bit higher. And then 8, the bulls got a follow-through bar. We have a tick gap. The open of 8 is above the close of 7. And there's some overlap with bar 8 on bar 7, but you can see the low of bar 8 did not touch the high of bar 6. So there's an open gap. This is a micro gap from the high of 6 to the low of 8. So bears who sold above 6, they did something reasonable. And if they scaled in higher, so far they have not had a chance to exit. Bar 6 was a bad buy signal bar, and then we got a good entry bar on 7, and then follow through on 8. So we might have trapped traders at the moment. Bull bar and follow through, some traders will buy the close of the 8. Others will wait to see what happens. We're at the top of the range, and there might be sellers above bar 3. The bulls still expecting a second leg to the upside. The gap plus bars 1 and 2, pull back, and then let me just draw maybe a leg 2 measured move. And that brings us to just about the high of Friday. So a couple reasons for this price to be a magnet. We have an inside bar on bar 9, and not a very good buy signal bar. It's a bear bar, and it's a high 1 at the top of a trading range. The problem here is that, yeah, it is the top of a trading range here, but in the grand scheme, the bigger picture context, this isn't quite the high of the range. The high of the range could be up here. So if you do sell bar 9, you need to have a plan to manage the trade and ask yourself what you're going to do if the market goes against you. Be ready to either exit and look to sell higher or look to scale in. The bulls probably not thrilled about bar 9, but they know it's not a very good double top with bar 3. The bears might argue double top, it's a lower high, but bar 9's a weak sell signal bar. There's a tail below, it closed above its midpoint. Plus we have a 6-bar micro channel. Since bar 4, all the lows have been at or above the prior bar's low. That increases the chances that there are sellers or that there are buyers below the first pullback. Another inside bar on bar 10. So again, II pattern, breakout mode. The bull's hoping it's a bull flag. We have a breakout, pullback, and then we rally for more legs to the upside. The bear's hoping for the opposite. Double top with bar 3, consecutive inside bars. But again, is bar 10 a good sell signal bar? Not really. It's a small bull bar. There's probably buyers below bar 10. And again, as far as selling above bar 10, not ideal when the high of the range could be up here. Bull bar on 11. Broke out above 10, broke out above the II pattern, but did not close above, so it could have been better for the bulls. But for the bears, they don't have much to sell. So far, in 11 bars, the bears really have just one bar. They have bar 3. Bars 6 and 9, they have bear bodies, but they closed above their midpoints, so you can consider those bull bars. So the selling pressure isn't great. It looks like the bears are not willing to sell until the market gets a little higher. They might be willing to sell above bar 3. We'll have to see. So there's expected resistance above a big bar like bar 3 in an overall trading range. $12, we have a third consecutive bull bar, and it's still a micro channel. All these lows at or above the prior bar's low, so increases the chances of buyers below the first pullback. Small bars, lots of overlap in here. But again, you ask yourself, what do the bears have? They're not really getting much selling pressure. Even though there's overlap, it's probably a bull channel. You can argue that it's a tight bull channel. And we know that tight bull channels are breakouts on higher time frames. So right now up to bar 12. By the way, bar 12 is the close of the first 60-minute bar on the hourly chart. And if you think about what happened since bar 4, the market has rallied with no pullbacks on this chart, only minor reversals. So this entire rally from the low of 4 to the high of 12, that's a breakout that is strong enough to expect buyers below and a second leg up. Tight bull channel, only want to buy. Context always plays a role. So if this was occurring all the way up at yesterday's high, it's really, I'd be talking about it differently. But because there is space to the upside in this range, that's why I think it's only better to look to buy for now. And then a breakout bar on 13. 13 is a little bit of a surprise. We're getting a breakout above bar 3 where there's probably sell orders and they're getting trapped on 13. So now the bulls, they want follow through on 14 to further trap the bears. And they're hoping we have a couple of open gaps. So we have an open gap from bar 6 high to the bar 9 low, space between these bars. And now we have a gap between the current price and the bar 9 high, the current price, the bar 3 high, and the current price. Bulls hoping the pullback is minor and brief, and there's another gap like this. Trap traders provide fuel, and at some point the bears who sold anywhere in here will have to buy back their shorts, driving the market price higher. 13 is a good breakout bar, and some bulls, they might argue, we have 3 pushes up, rallied on 4, rallied up to bar 8, and then 13. 13 is a good looking bull bar. They might argue it's a parabolic wedge, the best looking bull bar. I say that, but really bar 7 is the best looking bar so far. It actually helps that bar 13 isn't better looking than 7. Otherwise it'd be more climactic. But 13, they'll argue 3 pushes up. The problem here with selling 13, a couple problems. I keep saying there's room to the upside. We have this magnet above, and there's this lack of selling pressure. We have an open gap here, might have an open gap here. Yesterday's high, not too far. This could be the top of the trading range. Big up, big down, big up. So as far as selling 13, the expectation with a parabolic wedge is a minor reversal. So some bears might sell for a scalp, but they're not expecting a major reversal. They're expecting some exhausted bulls to take profits. We might fall a little bit, but that's really the best case scenario for the bears. The bulls, they're probably going to find a minor pullback, and then this entire rally is a breakout, and there will probably be a second leg leading to higher prices. 14, it's a reversal bar, but it's a doji. Bulls will argue it's minimum follow through, and we also have another gap. So there's a space between these bars. The bulls are hoping the gap stays open. The bears want to close the gap. Preferably, they want to close below the open of bar 3. Until that closes, there's gaps on this chart. There's gaps on the line chart. The line chart plots the closes of bars. So you look at bar 14, you ask yourself, is bar 14 a wedge top? Can you argue it's a higher high double top with bar 3? Is this going to reverse all of this? Well, probably not. For the reasons I've been saying. Not a lot of selling pressure in here. We just got a breakout with minimum follow through. So sellers above 3, they're trapped with room to the upside. The reality is there's probably more buyers below 14. This is still a micro channel that's been going on for over 10 bars. So probably buyers below the first pullback. 15 is an inside bar. It's a bull bar closing on its high. So for the bulls, there's probably got to be some sort of sense of urgency. If you're a bull and you're looking to get long and you're trying to buy a pullback, you have not had a chance to get long. And at some point, you have to pull your limit orders higher or just simply buy the market and get long. Now, there is something to be said about the context. Maybe not ideal to be getting long when you have all this selling to the left. Now, the most recent information is the most important. And the further the bars are to the left, the less of an impact they have. I'm not saying these bars are too far to the left to have an impact, but price is truth, and that's something that Al says. And you can't deny what's happening in front of you in hopes to see what you were expecting to see. So what I'm getting at is this might seem unlikely that the market's rallying and we're getting high in this range, but we do have a couple of open gaps and very little selling pressure. So this can go on a lot longer. This is still a tight channel, which means it's a breakout on a higher time frame. Basically, we're watching a breakout unfold in slow motion on this chart. So 15, bull bar closing on its high. It's always in long when you can buy. 16, another inside bar, consecutive inside bars, but very big lack of selling pressure. Probably a bull flag, probably going at least a little bit higher, probably buyers below 16. 17, bull trend bar. Now there is a problem for the bulls, and a couple of different ways to look at it. You can see here's a bull trend bar. You can call it a climax. We paused, climax, pause, climax, pause, climax. The bulls are getting consecutive climaxes. and the channel is parabolic. The bulls are trying to break out of the channel line, which has a low probability of succeeding, especially when you look to the left and you consider the context. 17 a bull trend bar, but the expectation is 1 to 3 bars sideways, probably profit taking. 18, another bull bar, so bull breakout and follow through. Probably buyers below 18. This is a very tight bull channel and still a micro channel. So buyers below the first pullback. It's a breakout and you can buy for any reason. Again, not ideal because of where we are. We're expecting sellers above the high of yesterday, but the momentum leading into yesterday's high is so strong that the reality is there's probably buyers below 18. There's probably going to be a second leg to the upside. 19, another bull bar, a little bit climactic. It's bigger than a lot of the bars to the left. It might be just about the same size as bar 7, 5 3/4 and 6 points. These bars are about equal in size. Little climactic, possible exhaustion gap. Again, we're getting climax, pause, biclimax, pause, here, and here. So probably profit taking. 19 will probably lead to profit taking and more sideways, but still nothing to sell. You look at this on, well, just consider the fact that we still have open gaps. 19 closing fairly far above the high of the prior day. The bulls still want to see follow through, but the bears don't really have anything to sell. And whenever you struggle with things like this, if there's a tight channel and it looks like a leg in a trading range, but it's sort of relentless, you can always look at maybe a 15-minute chart, just look at a higher time frame, and you will see the breakout more clearly. And you'll see there's no reason to be selling against this. We need more selling pressure. And then 20, we paused once again. But bar 20, similar to what I was saying about bar 14, is this going to be the bar that's the high of the day? And you sell below this bar, you sell one tick below this bar, stop one tick above, and you get this huge plunge. It's very unlikely. Better to wait for a trendline break and then look to sell on a retest of the trend's extreme. Now, we did get a breakout of yesterday's high and then no follow through, but there's still a micro gap, the high of bar 18 and the low of bar 20. So there's another gap here. So bears who sold the high of Friday, they got trapped on bar 19. They'll probably use any minor pullback to exit their shorts and then look to sell a little higher. Probably buyers below 20. This is still a micro channel, and this is very rare. This is a low probability event for a couple of reasons. I'll get into that a little bit later. 21, another buy climax. Now for me, 21 is, the word I'm looking for is kind of like suspicious, where we're getting so many consecutive buy climaxes and then pause and buy climax and pause and buy climax. So the expectation after 21 is another pause. Now the problem I have with 21 is a couple things. Bar 20 was supposed to be the follow-through bar for the breakout on bar 19. The bulls did not get follow-through. 20 is a trading range bar. There's probably sellers above 20 scaling in higher. And it's also very parabolic, and I drew that earlier. You can see the channel line just keeps getting steeper and steeper, and it keeps getting broken. And at some point, it's very unsustainable. And you combine that with the daily chart context, and you keep in mind that yesterday's high, Friday's high, is a bad buy signal bar. There's probably sellers above, big up, big down. The odds that we have a big bull trend day today are unlikely. So as strong as this is, it's really not ideal to be buying buy climaxes above yesterday's high, even though there's open gaps and even though this rally is strong enough for a second leg. A couple things wrong with it. We had the gap up, so this already is a second leg. And then the consecutive buy climaxes. So this is one of those situations where if you get a bear bar closing below its midpoint, it's wise to take profits below it, not necessarily sell to go short, but reasonable to get out of longs. Even a bar like 21, the expectation is more sideways rather than follow-through bars that look like 21. 22, a small follow-through bar. It's good for the bulls, but a lot smaller. But still, nothing really to sell for the bears. Now it is very climactic. We were expecting sellers above yesterday's high, and the market has a hard time knowing how far is too far. But once it goes too far, it knows. It knows when it's gone too far and when there's been excess. And the problem here is you have bulls who bought all the way up, and they're getting these climactic bars, and they're taking profits on them. So at some point, you're going to run out of buyers this far above the moving average, and we're going to have to pull back to find buyers. Now, again, the problem with what's happening, and for me personally, the expectations coming into the day, I thought there would be sellers above yesterday's high. I thought that today would close below the open, and that it would be an overall trading range day. So I don't have, as strong as this rally looks, I did not have too much faith that this small pullback trend would last all day long. And I think it's rather dangerous to be long up here in this context. 23, another small bull bar. Probably buyers below for a second leg. Now, I said this is pretty rare. This is a 20 bar micro channel. And you don't see those very often. And if you look back at any chart, you can look back at any day, and you're not going to find, it's going to take a while to find a 20 bar micro channel. The point is, it's very rare, it's uncommon. And whenever the market is doing something uncommon, maybe you were watching today, and maybe you were on the sidelines just watching the market rally and grind further and further to the upside. And it can be frustrating to be on the sidelines and to not participate in the trend. But I wouldn't beat yourself up about it, because for a couple of reasons. One, it's really a rare scenario what happened here. And two, you combine it with the context, and I thought it was just a low probability event all around. For bulls who are buying up here, you think about the theoretical stop, and maybe it's below 21, maybe somewhere down here, 19 or 17. It's probably not down here. It's too far. But you think about the trader's equation. At some point, we're going to pull back. And here's your 1-to-1 if you're buying the close of 23. And here's your stop. Here's your profit target. The reality is, traders probably are not using a stop below 21. And one stop they might be using, they might just use a measured move of the bar. Maybe their stop is here. And then 24, a big bear surprise. And I say surprise, and I think it's, again, one of those scenarios that it's sort of an expected surprise. So it is a big bear bar. It's very strong, closed on its low, and seems sort of out of nowhere. But you consider everything that I've been saying, it's not all that surprising. You have this sort of rare micro channel to an area of resistance above the prior day's high, and this is unsustainable. We're getting buy climaxes, pause, buy climaxes, all the way up. So it's not as strong as it appears to be. And at some point, you have bulls unwilling to buy so far above the average price. You have bulls taking profits, and you'll see eventually, once that momentum starts to fade and we're so far from the average price, bears will also participate in the breakout to the downside. So now we have a strong bear breakout bar, 24, and the bears are looking for follow-through, preferably below the moving average. And that's what they got on bar 25. So this is a good bear breakout. Bear breakout 24, follow-through 25, breaking out further, moving a big distance. You think about bulls who bought anywhere. If they didn't exit, they're suddenly at this huge loss. Or maybe they bought here, and they're riding it up for 7-8 bars, and then 2 bars later they're back at break even. This is a pretty major breakout. So 24, 25, that's a leg 1 breakout, strong enough for a second leg down. And there's probably going to be a retest. This is so strong there were probably buyers below, scaling in lower, and there's going to be some sort of retest of the trend's extreme. Now this was such a big and strong breakout, we're probably not going to get back to the high close, but just look to the left, where might we test? There were probably buyers below 21, below 20, that's a breakout point. So maybe we'll test to that price. So breakout follow through, you'll have bears selling the close, scaling in higher, looking for a second leg to the downside. 26, we rallied. It's a strong looking bar, but it could easily be a buy vacuum test of resistance. Think about what we've had, and I've said it on the daily chart, I've said it here, big up, big down, big up, big down. This is enough to convert the market into a trading range. You don't get bear bars like 24 and 25 in strong bull trends. So as strong as this looks, this really terminates that idea. Remember I said 24, 25, big enough distance, strong enough breakout to disappoint bulls. Anyone who bought above is going to be disappointed by this, and they'll use any bounce to exit. You have bears who also did not sell up here or on the way down, and they'll sell any pullback. And so here, the bar 20 low, that's a breakout. And then there's also maybe a 50% pullback of the breakout, which is the red line. And you can't see it. If I delete this one, you'll see it's actually just about the exact same price. So a couple of reasons to expect that price to be a magnet. It's a 50% pullback of the bear breakout, and it's a breakout point. And you can see the market got sucked back there rather quickly. Strong bull bar, but bad context. It's kind of like big up, big down, big up. It's bearish, they buy. It's bullish, they're going to sell. So more of a sell to close bar, 26. And as far as what about a major trend reversal? Here's a strong looking bull trend line break, and then this could be the retest. Like I said, this was enough that we're probably not going to get all the way back up here, but maybe we'll test a breakout point, 50% pullback. So this bar alone is already the minimum second leg for this breakout. The more extreme it gets, I also said it was really rare. 20 bar micro channel, yeah, the odds favor buyers below, but eventually it gets so extreme and so overbought, so far from the moving average, that you get a sell vacuum. I apologize, I had to pause there, forget where I was, but I think I was saying this became so extreme that you can get these sudden crashes like that rather than get a small pullback and then a rally. This becomes so extreme, you had bulls buying small pullbacks all the way up rather than breakouts, or rather than pullbacks, technical pullbacks. And then you finally get the first pullback and it's this huge bear breakout. It's not all that uncommon. So this is the major trend reversal setup. I know it's not that many bars, but you combine it with everything I've been saying, and you can argue this is a V top. We just rallied and then sold off, but this is a retest of these prices here. And the expectation was sellers above yesterday's high. Can't say that enough. So yeah, we rallied above it, but then crashed right back down below it. Bulls trying to get back above it, but this could easily just be a vacuum test of resistance, a breakout pullback, and a sell to close bar. And then 27, we have a low one sell setup. Good signal bar. The problem with low ones, there's usually buyers below. Maybe not necessarily directly below the bar, but probably buyers below 26. Strong enough bull bar for a second leg. But bulls don't want to buy above the bar because they're buying a 50% pullback of the bear breakout. They're buying this breakout point. They'd be buying at resistance. So rather than buy above the bar, they'll buy below the bar. And you see that all the time. We'll see examples of that later as well. So low one short, some bears might sell for a scalp, but there's probably buyers somewhere below. And then 28, we sold off, the low one triggered, and then we rallied into the close. So there were buyers below 26. Probably going to get a small second leg, but 28, it's a micro double bottom, 25, 28, but a bad signal bar. It's probably sellers above 28, and probably a low two short somewhere in here. Leg one, pullback, minor second leg, and then probably continuation. Is this leg one, pullback, leg two? I don't think so. I think you start to see this, and you see it all the time. This is more likely just the first leg. This entire thing, this breakout, pullback, small second leg, is really all just one leg. And then you get a more complex, maybe second leg, low two, and then you get leg one, leg two, a more symmetrical second leg. So I don't think this is big enough to be the second leg. I think it's common to see a sort of immediate small second leg where the low one triggers and then pulls back. And that's what I think we're seeing here. So probably sellers above 28 and buyers below if we get there. Inside bar on 29. Probably buyers below for a scalp. Bears looking to sell a little bit higher. And as far as buying above 29, I would not. It's probably a tight trading range after a bear breakout, probably a bear flag. Sellers above, bad signal bar. Plus it's an inside bar, reduces the probability for breakouts. 30, we have a bull breakout attempt. Once again, testing the high of Friday and unable to close above it. Now we have a leg up, a deep pullback, a second leg up. Bulls, think about if a bull bought the close of 26 and they got 27, 28, they're going to be disappointed. Maybe they scale in lower, buy below the bar, and they exit at break even on their entire position. And 30 would have given them that chance. So 30, similar to 26, might be a sell to close bar. After this big bear breakout, you're still expecting a second leg. This is all minor. 31, bear trend bar, 2-bar reversal. Can you argue it's low in a trading range? You can. It's leg one, leg two, but this is minor. This entire thing is probably a bear flag. Leg one, pullback, and then maybe leg two. So if you're buying below 31, you're taking a chance. You have to think about what your premise is and think about day structure and overall what the context for the day is. If you were arguing it's going to be a bull trend day, this 24 and 25 ends that premise. Right now it's either a reversal day or some sort of trading range day. And we're still expecting lower prices from after bar 24, 25. You look down here, bad buy signal bar 6, that's a magnet. The hive bar 3 should have been sellers above. That's a magnet, probably bounced there. Plus the low of the day might get there as well. Bear trend bar 32, so breakout and follow through. Now you can argue 32 is the first breakout bar because 31 only broke out below 1 bar. And that's fair. So here's a breakout. We still need follow through for the bears, but it did break out below all these bars to the left. And think about what do we have on 32? You can argue 3 pushes down, it's a wedge, 1, 2, 3, but you'd be buying against 2 consecutive strong bear bars. 32 is not a good buy signal bar. There's probably sellers above. And I don't think there's enough conviction to buy the close of 32. I think there's too much risk of a downside breakout and a second leg. 33 falling further, so now we have a breakout and follow through, 3 consecutive bear bars. Strong enough breakout to expect a second leg from this breakout. So this might be leg 1, leg 2, but this might reset the leg count. Or stated differently, maybe it's leg 2, but it's strong enough for its own subsequent leg. Sellers above 33, sellers above 32, scaling in higher, probably going at least a little bit lower. Might be sell to close and I should have mentioned this earlier. I think 25, 24 maybe, 25 probably made the market always in short. We never flipped back to always in long here. So probably always in short now, or still always in short. 34, fourth consecutive bear bar. 5-bar micro channel. It's likely to pull back soon, and for a couple of reasons. Leg 1, leg 2, 33. Looks like it tested it to the tick. We're trying to break out below that, but we're expecting support there from that measured move from profit-taking bears. Now we have a 5-bar micro channel, more likely to pull back once it gets to 5, 6, 7 bars. But the pullback is likely to be minor. There's probably sellers above 34 and 33. And if you're short, where do you put your stop? The sort of correct stop, the major lower high. Here's a swing point and then a breakout, strong breakout to a new low. You can put your stop above 30. Some traders don't want to sell. They don't want to risk to that far above the current price, so they'll take a measured move of the current bar, and that's what I showed earlier. I showed that with bar 23. Rather than stop all the way down here or here, you just put it at a measured move of this bar, and then you just get stopped out here. So similar right here. 34, maybe your stop is this line. It's around, I don't know, maybe a couple ticks above the bar 33 high. The premise being that we should not get a breakout and go for a measured move of 34. And if we do, we're probably not in a bear trend. 5-bar micro channel, 4 consecutive good bear bars with little overlap, micro gaps, strong enough for a second leg. So we might pull back, but there's probably going to be a second leg. And the reversal is probably minor. 35, we went outside up. We tested very close to the bar 6 high, which is expected to be support. We didn't quite get there. I think we probably will. We came so close on 35. Market often gets close to an obvious target and then pulls back, only to get there a little later. 35, it's a bar that reminds me of bar 26. Strong enough bar for a second leg, but it's a minor reversal. Think about it. It's almost the same thing. Strong bear breakout, and then a good bull bar, but it's minor, and it gets a small second leg, and then we fall to the downside. Strong bear breakout, strong bull bar, strong enough for a second leg, but the buyers probably come in below the bar. It's an outside bar after a bear breakout. Remember that outside bars are trading range bars. Breakout below 34, failed. Breakout attempt above 35. Looks strong, but the context is bad. Breakout points to the left, 28 low, probably resistance there. Sellers above 33 as well. And it's an expanding triangle, so there's probably just sellers on the close of the bar as well, considering the context. 36 pause bar, it's an inside bar. You can call it a high 1, but probably sellers above. Probably fall below 36, and the bulls looking to buy a pullback like below 36 or even lower, maybe below 35 for a small second leg. The bears know that a second leg up is likely after bar 35, so they might wait to sell until after that second leg comes. Bear breakout 37, but still within the range of 35. This is all minor. It's a minor reversal, and now we have continuation, but you have bears who sold the close of 34, and then they got 35. So they're probably going to buy back their shorts on a retest of the 34 close, which might happen on the next bar. We came close on 37, but did not quite get there. Inside bar 38, trading range bar. Now we have leg 1, pullback, leg 2, pullback, maybe 3 legs down, maybe it's 2, then a pause, and maybe a second leg after that. But it's a trading range bar with support to the left, probably buyers below 38, but still minor. This is not a major reversal setup. Not enough buying pressure. It's all right for the bulls. They have decent bars here, 26, 30, 35, but the bear trend line is still intact. The bulls have to do more. 39, that was the second leg for the bulls. We rallied on 35, pulled back for a couple legs, rallied up on 39. 39 was a bull bar closing on its high at one point. So we had a bull bar closing on its high, a pullback, and then a second leg. Now it looks like a failed breakout. It's just a tail of a bar, but that is 2 legs up after a bear breakout. Bears selling breakout points like the 28 low, maybe the 25 low as well, getting filled during 39, and then we sold off into the close. So still, all of this is a minor pullback, probably going further. This breakout was strong enough for a second leg. We got a 2-legged pullback. Probably look to go a little bit lower. 40 bear bar, bad buy signal bar. We finally tested, I should have said this on 39, we tested the close of 34. Bears who sold the close of 34, disappointed on 35, finally got the retest on 39, and there were buyers into the close of the bar, probably from those disappointed bears. But is that enough to convince more and more bears to exit and more bulls to buy? Probably not. There's probably sellers above 39 if we get there. This is not a good buy signal bar. The bulls are hoping for another bar like 35 on bar 40, and then bar 40, this is what we got. Probably sellers above, probably going a little lower. It's a spike in channel. We have a spike, pullback, and we're channeling down. But the channel is fairly tight. So probably sellers above 40. When the market's in a bear channel, you have traders selling above bars and buying below bars, taking profits. Bears buying below bars, taking profits. Bulls buying below bars for scalps. But it's a fairly tight channel, so usually better only to look to sell. A little lower on 41, it's another bad buy signal bar. It's a small bar, trading range bar. This itself is a pretty tight channel. The overall channel is pretty tight. This breakout was strong enough for a second leg, and this looks like the pullback, and this might be the continuation into a second leg. And then let's look for a couple of magnets. The channel line might be support, and then here's a measured move based on the height of the breakout, 24 and 25. And that's around these bars in the opening range, so probably support in this area. Also near the bar 6 high, probably find at least a bounce there. 42 a bull bar, but closed below its midpoint. You can argue there's buyers below, but it's still a tight bear channel, so not ideal. If you are buying, you're probably buying for a scalp. You're not expecting a bull trend out of this. And look at all the bars below the moving average. So it's pretty dangerous to be looking to buy here. Again, strong enough breakout for a second leg, which I'm not sure we've gotten yet. And then 43. 43 tested the channel line, tested the measured move of the breakout, and it tested the low of the day to the tick. So a couple things were tested on 43. 3 consecutive sell climaxes, 1, 2, 3. That increases the chances that 43 does not get follow through, but rather goes sideways to up, maybe pauses, goes sideways for 1 to 3 bars. You can see the buying into the close of the bar. That's a warning. This might have been an exhaustive sell climax, and it might be strong enough. It's a big enough breakout to get a small second leg, but we could easily pull back and test the 42 low or the 41 low first. And that's exactly what happened on 44. Traders bought the close of 43, 3 big sell climaxes. This is just a 1-bar breakout, and then it immediately tested the breakout points. But as far as buying 44, it's still a tight bear channel without a really strong trendline break. So not ideal to buy 44. Bears will see that rally as an opportunity to sell above. And they sold the close 45, and we have consecutive inside bars, probably sellers above 45 and buyers below. 46, we broke out to the downside. Now we have a micro double bottom on bar 46, small body, and still no trend line break. So the buyers are buying for scalps. The upside is probably limited. There's probably sellers above 45, 43, scaling in higher, sellers at the moving average, at the bear trend line. $47, we have a bull trend bar, but now it's 2 legs up, testing resistance. Leg 1, pull back. Leg 2, after a bear breakout, we should get a second leg. Was this the second leg? I don't know. It's kind of similar to up here. Leg 1, leg 2, but not really. It's more like leg 1, and then this is all part of the pullback, leg 2. So maybe here, leg 1, part of the pullback, and then leg 2. Good looking bull bar, but bad context, near the moving average and the trend line. And if nothing else, if this is a trading range, it's high in the trading range. Probably sellers in this area. Outside down 48. Sort of a surprise bar. It's very big and not ideal to be buying. Even though it might be a trading range, it's not really clear yet. There's still lower highs and lower lows. So it's still a bear channel. We could easily go lower, but probably buyers below bar 43. 49, another big bear bar. But think about what bars 48 and 49 are. We have the 2 best looking pair of bear bars all day. And it's coming late in a bear channel after 3 or 4 legs down. 8 1/4 points, 7 3/4. These bars are some of the biggest bars, besides bar 24, that we've had in this entire sell-off. And it's a warning that this is a climactic end of the trend and an exhaustion gap. You get the strongest looking bear bars, but after you're 20 bars into a trend, that could be the last of the weak bears selling, the weak bulls exiting. And we're vacuuming down to a price where the strong bulls are looking to buy, and the strong bears who sold anywhere along the way are going to use these bars as a gift to take profits. We're testing the 60-minute EMA. And again, 3 or 4 legs down. Lots of tests of this channel line. Lots of breakout attempts that are failing. Bull bar 50, disappointing follow through. If you sold a close of 49, that's not what you wanted to see. Probably buyers below 50. 51, low 1 short, but bad context after an exhaustive sell climax. The market's falling quickly, far from the moving average, at a rate that's a lot steeper than the moving average is. It's parabolic, it's unsustainable. 51, there's probably buyers below. Trading range bar 52. So now we've had sell climax and then sideways for 3 bars. Is it more likely we sell off again or reverse? Well, this looks more like an exhaustive sell climax, and this bear breakout had bad follow through. So I think it's more likely we test higher. 53. Bull breakout, weak close, but went far above all these bars, probably strong enough to go a little bit higher. And there's buyers below 53. It's a low 2, but bad context, just like the low 1, and it's a big bar, so big risk. 54, we triggered the low 2, but there were buyers below, probably buyers below 54. Not a good buy signal bar above 54, so sellers above, but they may not come in until 53, or maybe the moving average breakout points. Now 55, we have a second reversal. We reversed above, you call it a third reversal, above 51, above 52, above 50 on 51, then above 52 on 53, and now another reversal attempt on 55. We have a double bottom, you could even call it a triple bottom, and a decent reversal bar. Bears, they'll probably exit above 55. Bulls might buy, taking a chance. It's still probably minor, but this is a probable exhaustion gap with bad follow through for the bears. At some point, they get disappointed. They look to sell higher. The bulls take a chance and they buy, and we rally. 56, bad entry bar, but another bad sell low after an exhaustion gap. Tight trading range, buyers below, might be a low 3, but the bar closed above its midpoint. It's a bad sell signal bar. There might be sellers above, but again, they're not coming in until a little bit higher. And then 57 went outside down. We're testing below 49, so 49, 48, 49. Big enough breakout for a second leg, and this might have been that second leg. 1, 2, 3 pushes, wedge bear flag, outside bar, but outside bars are trading range bars. Testing the bottom of the exhaustion gap and rallying once again. This was not what the bears wanted to see. Some bears might just exit on the close of 57, seeing it rally into the close and seeing the bad follow through after the sell-off. Not a good buy signal bar, 57, for the bulls. They might wait for a better buy signal bar. Pause bar, 58, it's an inside bar, buyers below. Maybe sellers above, but context isn't great. And then a bull surprise, 59, bull trend bar. Closing just below the moving average, so forcing you to buy at resistance. But we're probably going at least a little bit higher. 47 was a bad sell signal bar. The market's probably converting into a trading range now. We'll probably go a little higher and test the bad signal bar. 60 follow through, so bull breakout and follow through on 60. Probably going at least a little bit higher, but we could pull back because this is a trading range. Bulls might prefer to buy a pullback rather than near resistance. And then instead we rallied further on 61, but now we're testing the top of the last leg in the sell climax. Big down, big up, common theme. We know that means the market's in a trading range. And when the market's in a trading range, we know we want to look to buy low and sell high. The market's high, so better to look to sell. It looks like it's always in long consecutive bull bars, a couple of them being big, but the context is bad. So if it's always in long in a trading range, better to look to sell. 62, big bear bar. It's an inside bar. You call it a high 1. There's probably sellers above. 63, that's a high 1 signal bar. Technically, now we have a pullback. Consecutive bear bars, weak buy signal bar. Sellers above 63. Strong enough breakout, we're probably going for a second leg. The breakout or the pullback might be deep, and the second leg could be delayed. But 63 is a bad high 1. It's probably sellers above. 64. Triggered the high 1 and then found sellers above the bar. This breakout pullback might have been strong enough for a second leg. So we go above 63, bad high 1, might go for a second leg before we rally. And then 65, an inside bar. That might be the second leg the bears get. Leg 1, pullback. Leg 2, now the bulls have a breakout with a 2-legged pullback. There were probably buyers below looking for a second leg. 66. A bull bar closing on its high, but bad context. You look to the left, you have disappointed bulls from buying the close. 61. After this pullback, they'll probably use this rally to exit their longs, so probably resistance right above. 67. Bulls sold a close of 66, disappointed over here. They scale in, and then they get back near their original entry, and they exit their longs. We didn't quite get there. If we do, there's probably sellers above. 67. Outside bar, 68. The market's in a tight trading range, and there's probably sellers above. And we could easily come back and test back down here. This was a bad buy signal bar, and that's a magnet to get tested. 69 inside bar, but it's a wedge and it's a second leg. And so what I mean by that is we have leg 1 strong enough for a second leg. Well, here's the second leg, and the second leg subdivided into 3 legs. We rallied on 64, pulled back, rallied on 66, pulled back, rallied up to 69. Trading range bar here, outside bar, inside bar, IOI, it's breakout mode, probably sellers above, probably not ideal to buy below 69. 70, rallied a little further, still a second leg and still a possible wedge second leg, sellers above 61, high in a trading range. 71, we fell below bar 70. Buyers below, it's a bull trend bar, bad sell signal bar, but now we have a high 1 after 3 legs up, and you can call it 3 legs here, and then 2 legs here. Some traders will even call it 3 legs like this. 1, 2, 3. It doesn't matter that the second leg overshot the channel line. Probably sellers above 71. And then 72, they sold to close. Big bear bar, 72, probably going at least a little bit lower. Completed a price structure. It's a double top. Strong sell signal bar. Probably sellers below 72. Bears might sell, and bulls probably want to get out of longs. 73, it's a disappointing entry bar if you sold below 72, but 72 is still strong enough for a second leg, so any pullback is probably minor. Now we have a high 1, high in the trading range above 73, probably sellers above. And then there's a second leg to the downside. Bear breakout, pause, bear breakout, expecting bad follow through because we're in a trading range, but probably going at least a little bit lower, like to the bar 58 high, where there are disappointed bears waiting to buy here. We also had bulls who did not participate in this breakout. They missed the entire rally. They'll look to buy down here for a double bottom and then a rally as well. 75 broke straight through, so bear breakout, pause, then a breakout and follow through, but context is bad. It might be, now there's a couple of different ways to look at this. You can look at it as a second leg trap, where this entire sell-off was leg 1, then we had a 2-legged pullback, maybe even 3, 1, 2, 3, and then a strong looking second leg, but testing the bottom of a trading range. This was enough sideways that there's buyers below, and the market's in a trading range. Now, you could also call it 3 pushes, 1, 2, 3, consecutive sell climaxes, overall a broad bear channel, and probably buyers below. So even though 74, 75 look strong, and they are strong bars, but context plays a big role. It's just like 48, 49, these big, strong-looking bars, but the context is bad, more likely to go sideways to up. I think the same applies on 75. 76 breaking out a little bit further to the downside, actually breaking out below the bars to the left. Good for the bears, but buyers into the close, a much weaker breakout bar. Strong enough down, the first reversal up should fail, probably sellers above 76, bad high 1. And then a big bar, 77, we sold off even further and then rallied all the way up to the close on 77. So bears less willing to buy above a bar, less willing to sell above a bar like 77. Bulls, not an ideal buy because of the sell-off and the big bar, so big risk. They'd rather buy a pullback of the bar. And then 78, we sold off a little bit. Bulls bought a pullback, maybe the open of the bar, and then we rallied on 78. Common theme, once again, big down, big up, big down, big up. Lots of trading range price action. 78, you're expecting disappointment because that's what we've had pretty much all day with breakouts. Bear breakout and then a big bull bar. Bear breakout, big bull bar. Bear breakout, big bull bar. And here, we went sideways, big bull breakout, and then sold off. Breakout, bull bar, big breakout, and then reversal. So we're not expecting a buy the close rally to end the day. One more thing as we come into the close of the day. The open of the day is a magnet. It's a trading range day. And we're not that far from the open. So the bulls at a minimum will try to get to above the open of the day. And the bears just want to keep the price below the open and claim the body. Bad follow through, 79, that's expected, but strong enough up on 78 for a second leg, but also strong enough down to 77 for a second leg down. So confusion and probably going more sideways into the close. 80, a small trading range bar, probably sellers above and buyers below. And then 81, testing the moving average and closing there. So the bears, they can claim the close of the day. But it's really a trading range day. Look at the daily chart. Big tail, here's the open of the day, the red line. Big tail above, big tail below. And the bears just barely closed below the open. For always in today, Coming into the day with the gap up, and then bars 1 and 2, it might be always in long there. But then you get bar 3, it looks like big up, big down, big confusion, trading range open. And we start getting this small pullback rally, and it might be around somewhere in here, 13, 14, 15, somewhere it becomes always in long with a little bit of caution, proceed with caution because of the context. You start getting these climaxes. 21 might be more of a profit-taking bar, and then when you get 24, for me that might be enough to flip the always in, but then 25 confirms it. Follow through bar, closing below the moving average. From there, the market stayed always in short all the way down until here it might have become more 50-50. Then we got this bull breakout and follow through. Might be always in long, and it gets even more bullish. But remember, in trading ranges, always in can get you in trouble. Always in long, but look to the left. Better to look to sell. Second leg up, but at this point, it really probably always in short based on context, high in a trading range. Big bear breakout, but look to the left, probably buyers below. So it looks like it's always in short, but always in short in a trading range means it's time to look to buy. For stop orders today, I thought it was maybe a little risky to buy above 2, testing the breakout point, but then we got this deep pullback, the gap up, expecting a second leg. These aren't good buy signal bars, but then you get bar 7. I think you can buy above 7. And then how do you manage it? Well, you can get out below a bear bar, maybe a double top, and it just never came. And then if you're managing it sort of always in style, just get out below a bear bar or a second reversal or maybe a stop, measured move below the bar. You could ride it all the way up. It's always in long at some point in here. You can buy above 15. You can buy above 17. Gets a little iffy in here with yesterday's high, expecting selling. But you do get a breakout with a weak reversal attempt. And then another breakout. Again, buying up here. These aren't ideal buy climaxes in an area where you're expecting resistance. And then for more stop orders, I thought it was okay to sell below 24. You could sell the close 25, sell below the low 1, 27. Low 2, you could sell below 31. You could even sell below 30. Sell below 32, 33, 34. All reasonable trades. Always in short. Sell below any bear bar. Until here, I think it becomes more, possibly in a trading range, less ideal to be selling on stops. You can sell below 48, taking a chance, but 49 is kind of like the best case scenario. Obviously, 3 pushes down. Strongest breakout in the entire bear trend. Always a little suspicious. And so, might be a profit-taking bar there. And then in here, not a great stop order market. It's really a tight trading range. Limit order market, you could sell, or you could buy above 59 or 60. Bull breakout, follow through. But then you get 61, testing resistance, limited upside. And then in here, stop order is really not ideal. I thought selling below 72 was reasonable. Maybe you sell below 74, 75. Again, 75, similar to selling over here or here. Not ideal. Sell climax, testing support. I thought 77, not ideal. It's a big bar, so big risk after pretty strong sell-off. Not an ideal stop order trade there. And for limit order trades today, I thought buyers below 1, scaling in lower, and then all the way up, buyers on small pullbacks, buyers on any pullback, which never came, but all the way up, nothing really to sell until here. Sellers above 25, sellers above 28, 29, sellers above 34, 33. By the way, I don't know if I showed this earlier. If you used this bar for a measured move for your stop, you can see 39 tested it to the tick. So maybe you put your stop 1 or 2 ticks above that price, this measured move price. Sellers above 34, and then I thought buyers below 36 wasn't the craziest trade in the world. After 35, you're expecting a second leg. I said bears will step aside and wait for the second leg to get short again, and that's what they did on 39. So you can buy below 36, but it's counter trend, not ideal. And it's for a scalp, definitely not expecting a bull trend and a swing. And then here, this was a bad double bottom, 35 and 41, small signal bar, tight bear channel, sellers above. And then in here, II, buyers below and sellers above. Down here, 51, low 1, but after an exhaustive sell climax, low 1 consecutive bull bars, buyers below. Limit order market, then you have a bad micro double bottom, bad signal bar 52, sellers above, bad low 2 signal bar, buyers below 53. And then these aren't good stop orders. You can sell above bars and buy below bars until you finally get this breakout 59.60. Buyers below the first pullback, which was below 62. You could buy below here for a second leg. Buyers below all the way up, but this was a micro channel, never triggered. And then I thought you could sell above 73, but that never triggered. And then sellers above these bars, but they didn't trigger until later in the day with not enough time. And then big enough breakout to the upside for the first reversal to fail. You could buy below 79. And then where do we go tomorrow? Well, today we had a trading range day, as we've been having. So I am expecting more of the same, more trading range price action. Here's the daily chart. And I mentioned the 3 pushes up. On the weekly chart, 1, 2, 3. So I'm expecting resistance up here. There's an increased chance, I think, of more bearish days coming up. But as far as tomorrow, we have a bad sell signal bar from today. It's a doji in a tight trading range, probably buyers below. But we could easily sell off all the way down, maybe to here, maybe below Friday's low. We don't necessarily have to bounce directly below today's low. We could fall further in this tight trading range. And again, the added risk that we just continue down. Not that we'll get there in a day, but the increased risk that we sell off to the moving average. And I have this red line drawn, the breakout point here. And then if we do get above today's high, I'm expecting sellers. All right, as always, please feel free to leave questions in the comments and include timestamps for any question specific to this video. All right, hope everyone has a good rest of their night. Thanks for watching.